Good day and welcome to the Gold Ghosts and Guns Market Report for Sunday, the 2nd of February, 2020. Sorry this is a little late this morning. Was up late last night doing a early birthday party with friends, and well, I didn't get to sleep till 4 a.m. Started working on the charts today, and well, time has just gotten away from me. That being said, this is all I'm working on today, so I spent a little extra time. I've got a couple of things that I want to cover from a couple of requests that I'm covering today from a patron, so to cover both the gold and silver ratio and why I like Dash. Want to also throw a new shout out to the new subscribers, Hardy, hello, and all of that. If this is your first time watching one of these market reports, well, this is what we do. We do a little bit of headlines to start out with, and then we do charts after that. I'll try and make sure that I go over the finer details and the terminology as I go along to keep you all up to speed, to get you all up to speed as quickly as possible. All right, so, excuse me. It was a long day yesterday, but it was fun. It was very fun. Camille smoked a rib roast, and we played games until 4 o'clock in the morning, and it was great. So, that being said, I'm surprisingly lucid today. Honestly. Let's do this. I can't honestly get over this picture. This is the funniest thing I've seen in quite a long time, and I used it on my blog post about Brexit on Friday, and then I used it on my live stream the other night, and I'm using it here. This is just the best picture of all time. It just captures the essence of what Brexit is and what the populist wave that's occurring across the world. It captures it so eloquently. Words are not necessary. Nigel Farage laughing in the face of everyone. Well, dude, just makes me happy. Just makes me smile. I gotta love this guy. I can't. I went on a rant the other night in the live stream about this to try and remind people just how enormous his accomplishment is. Brexit is not something that happens without him. Period. It's not something that happens without us. It doesn't happen without the British people being refusing to be cowed by an insane level of fear-mongering. It doesn't happen for all of those reasons, and it doesn't happen because the establishment is tone-deaf, arrogant, entitled, and incompetent. But at some point, you laugh at the guy wearing the frickin' clothes, telling you all he's, not standing there with his Johnson hanging out. And, like, once you get to that point, everything else collapses. Mockery is the way forward. I watched a very interesting little clip of the Friday night Brexit celebration after the 11 o'clock Big Ben struck. They're out of the EU, and there's like a 45-second clip that a friend of mine from the UK sent me on Twitter of a reporter trying to downplay everything, and this random irrepressible Brits walking by going, "God save the Queen and Chelsea," and many other things that were, well, I tend not to swear during these market reports, though that doesn't always. That's not a one-to-one correlation. There are a number of them there where I just can't help it. And to watch them just not care at all about decorum and about the way things are supposed to work and being polite. It's like the antithesis. This moment in British history is like the antithesis of everything that John Cleese complained about in A Fish Called Wanda. If you remember one of the great comedies of all time is A Fish Called Wanda. It's John Cleese complaining to Jamie Lee Curtis saying, "Do you have any idea what it's like to be British?" And to say, and to talk about how they're also deathly afraid of embarrassment. And, that is, I guess, maybe the upper or the middle class and the aspirational middle class in British society, as opposed to, the guys who just made sure that they're out of the European Union. And those guys, those Chelsea football thugs and the rest of them. I mean, it's I don't want to. I'm trying not to, do the glittering generality thing. I'm not trying to stereotype here. There's a number of different classes and subclasses within British culture, but the British society. But at the same time, there's a certain everybody just takes the two fingers, sticks them up in the air, and says, the heck with y'all, and you lot suck, and that's what it takes to pull off what happened here. And you do it with humor, and you do it with forthrightness, and you do it with contempt. These people think they are entitled to rule over us. Hillary Clinton is going to get back into the U.S. presidential race because she feels entitled to be the first woman president, because she has killed and maimed and destroyed millions of people in her quest for power, and therefore, damn it, she wants the gold watch. And she doesn't care who she kills or who she destroys to get there. And people like Nigel Farage and us just need to keep laughing at her. Because the more you laugh at people like her and Guy Verhofstadt and Jean-Claude Juncker and now Ursula von der Leyen, Christine Lagarde, Mario Draghi, the more you laugh at these people, the more you just call them a bunch of ridiculous twats, the less power they have. The more you embolden everybody to stand next to you and go, yeah, why do you rule over us? Why do you feel like you have the right to rule over us? This is what's coming. My people are coming next. Salvini is coming hard. I can't wait to watch it happen. It's like British politics has become one big, beautiful Monty Python skit. Well, I am your king after all. Oh, king, very nice. I didn't vote for you. Strange women lying at the bottom of ponds, distributing swords is not a basis for a system of government. Like that scene between the peasant spouting communism and King Arthur in Monty Python and the Holy Grail is what British politics is right now. And it's a beautiful thing. And we need to get there here in the United States. And we're really close to it. And the Democrats are starting to really feel just how much this thing is going to slip from their grasp. And they're going to go crazy. They are going to go completely scorched earth crazy. And so while we're smiling this morning, we need to realize that this is going to become very deadly serious over the course of the rest of this election cycle, and certainly as we move into 2022. But things have fundamentally changed because of what's happened in Great Britain. And don't think we can underestimate just how important it is that Farage gave the British crown and the British people the opportunity to take back their government, to reassert their place in the competence and dominance hierarchy in the world, and not be subsumed by a bunch of feckless European technocratic drunkards. Entitled bitches. So from here on out, we laugh at them. From here on out, we call them what they are. And we show them zero respect at every level. Because this is our time. This is how we win. With mockery, passion, and honesty. They can't stand up to that. They hate that. Nothing more than anything else. Never forget that the moment, go back to watching V for Vendetta again. That movie is so good for the way it's laid out. Remember what actually precipitates the acceleration of the government crackdown in that movie. It's the Benny Hill skit on Stephen Fry's television show, where he has the Chancellor and V in this, doing this Benny Hill skit. You can't laugh at power. They don't like it. Keep laughing at them. St. Nigel leads the way with a cigarette in one hand, a pint of bitters in the other. That's the way the world's supposed to work. Political correctness be damned. You mock these people incessantly until they finally go away. Let's get to the charts. I'll get you out of here. All right. Let's talk about gold real quick, and then we're going to talk about silver. Then we're going to talk about the gold to silver ratio, because one of our longstanding patrons asked me about this a couple of weeks ago. Promised I'd do it, and then I promptly forgot. And to be honest with you, I think it's better that we do this now as the first one of these for February, as opposed to having done it during January, because of all the events that have happened in January. But let's go through the situation in gold real quick, and then silver, and then we'll see the difference between them, and then we'll look at what's happening within the gold to silver ratio. So Friday's close on gold is incredibly good. This is the weekly chart, but it's also a very strong month for January. These 4 bars here represent the bar for January. So there's your open, there's your low, there's your high, and there's your close for the month of January. Open, low, high, low, close, and this close here, which is, again, this was a breakout bar in December, right? If this is November and this is October, then this close here is a breakout above this level, which is very important. We got a peak through, and the highest weekly close since the peak from August. This is all very good structural price action in gold. In a bar this volatile, where we had a big blow-off peak the night of Iran's attack on the U.S. air bases in Iraq, to close within $12 of that in the upper half of this bar. So from the low to the high, when you're trying to assess what's happening, if you're not sure how to read a candlestick, if you see a bar, if you've got a follow-through bar, so you got a breakout bar like this one, and then you get a follow-through like this, draw a midline through the middle of the bar and just say, okay, where do we close? Do we close above the midline or below the midline? The higher you close towards the high, the more bullish the bar. The more you close towards the middle, the more neutral the bar, because it could be a harbinger of us going lower. So this bar here, when we get the blow-off peak and we get this massive correction back down to here and close down here, this is in the lower half of the bar. This is a bearish bar, even though we closed the week above the previous, above the open and above the previous week's high, because this could have used up all of the bullish sentiment and all the bullish energy in here. We could have massive shorts and not nearly enough bulls to take the price higher, to get such a weak follow through to the downside, and then immediately push through with 2 very good bars. Noticing we're closing in the upper half of the bar here and the upper half of the bar here, really the upper 20% of each of these bars. That's very strong. Even this bar, when we opened here and closed here, we still closed in the upper quarter of the bar. These are all 3 very bullish bars, because there's no attack to this low. So this is all very good constructive price action that tells me that we're going to move into February, going to challenge this high at 1611 at least one time. Now, that doesn't mean that gold is going higher than that, but for right now on the weekly chart, we're going to get another challenge at 1611. That's a good sign, okay? And the monthly chart, and this being a monthly close, also tells us that February should be a good month, because this is only the beginning of a potentially longer uptrend. This is only 2 months long. That's not a particularly long uptrend. Gold is more than capable of putting in a 3, 4, 5 week uptrend before correcting. So, or 3 or 4, 5 month uptrend. So this could take us into March or April or even May before we see a correction. And that would be very strong. And if that's an uptrend, that's going to push us back towards 1700, possibly 1800. Possible for that. We keep watching it on a weekly basis to see what occurs from there. But right now, gold's in incredibly bullish posture at both the weekly, the monthly, and the quarterly level. I don't have the quarterly chart or the monthly chart today, but we've reviewed them recently, and you can look at them on places like investing.com or whatever. You can get that information from there. Okay, silver. Now let's look at the silver monthly chart because this is the important part here. Silver is mired in a downtrend after this massive breakout from last year, right? Which ended the bear market. So silver's no longer in a bear market, but it's not in a bull market. It's still trading, between this $14 and $21 area. It's got to clear this $21 area before you can really consider this formation here to have been completely negated, and then we can go higher. But once silver clears $21, it's going to $40. Maybe not in an hour or 20 minutes or, a week or a month or a year, but it's going there. It's probably going to, once it clears that $21 area, it should, in sympathy with gold, move higher. Now, the question is, what does that actually, where are we? Well, this was a strong 1-bar reversal signal closing above the previous low of the trend. So we have a 6-month downtrend here. And the last bar in that downtrend is reversed by closing the next month above the high of that bar. That's a reversal signal. We get 2-month follow through, a blow off peak, and then a two bar reversal where it takes 2 bars to close below this low. A 4-month downtrend, but it all happens within the context of these 2 up bars. So that's strong. We don't challenge the previous low. We now have a higher low, and then we have a high. So we have a high, we have a low, a high, a higher low, and now a higher high. So this is a bull trend. As long as you're doing a zigzag pattern where every time you zig, you go higher, and every time you zag, you go lower, but higher than the last zag, you're good. This is an uptrend. So what do we have here? Well, here we have this massive blow-off peak from August and into September, and silver's not sure what to do. It's consolidating these gains, and it's consolidating these gains within the context of this bar, within the breadth of this bar, which is enormous. Now, we had an opportunity after 4 months worth of consolidation, and notice that couldn't seem to put in a monthly close below $17. So people were coming in on the close and supporting the price at $17, right? We had an opportunity here with a strong December close in January, broke this high at 1815, but couldn't close above it. Again, so this is, and we're just near the middle of the bar, just below the middle of the bar, like I talked about earlier. This makes this a bearish bar because we used up a lot of bullish energy here and couldn't get a technically significant close. That keeps a lot of bulls out of the market coming into February. That's what that means. Had silver closed at 1815 or 1820 or something like that, ooh, different story completely. Now a real challenge of $19 could occur, or a challenge of this level here around 1860 or so could occur. Certainly $19 this month's high, the January high, absolutely. And then once we get to there's not much on the chart that keeps it back from 21. So if you believe in the conspiracy things that the silver is the most manipulated market in the world, and I'm not going to disagree with you about that, but I'm also not going to wholeheartedly agree with it. I'm sympathetic to the argument, though I think it's a mixture of both. I think it is a very manipulated market, but at the same time, its fundamentals are also not good. We're going to get to that in just a second. Therefore, silver's not ready to assume any kind of monetary role, but at the same time, it's starting to show monetary character because it's in a bull market, and the rest of the commodity space, industrial commodity space, it's not in a bull market, but it's in a bull trend. Okay? Like, I'll show you the silver chart. We'll look at the oil chart in just a minute, and you can see the difference in the bifurcation between silver and oil prices in terms of direction is an early indicator that things are beginning to change in the silver market sentiment-wise.
Now that happens when the silver to gold ratio gets out of control. It gets too high because silver is poor man's gold. And when gold becomes too expensive relative to silver, the theory goes silver should rally and outperform gold. And this is the gold to silver ratio, the number of ounces of gold you can buy with a number of ounces of silver you can buy with 1 ounce of gold. So now, thinking about this, just looking at this at a technical level and not looking at it from a, I could have actually done this as a candlestick chart, and that probably would be actually more interesting. And I may do that for this month's newsletter. Now you think about it, that's just a chart that would take me like all day to produce. It would take me, a couple of hours to put that chart together, but it's very doable within Excel. So I'll put that on my to-do list. Maybe that'll be a really good discussion for this month's newsletter coming up. And now just under 2 weeks. So, because I think this is still an important story and a lot of people who are subscribers of the newsletter are interested in. But let's just look at this line chart. We have a peak here, at nearly 195 or something like that. And then we got a pretty strong reversal, and it reverses very quickly below this low here. So we've got this up, series of higher highs, higher lows. This is a big uptrend, all happening from 2016, from the time Donald Trump is elected until last summer's rally. And now silver is beginning to firm up in relative to that. So we've got a new low, but then again, we don't have any follow through to the downside, the saying that silver is starting to structurally outperform gold. So this could be setting up, a new ratio area. Like this would be a range-bound trade between, what is this, 78 to the downside and 85 to the upside in terms of or 88 to the upside in terms of the ratio. It's possible. So we continue to watch this. Continue to watch to see if silver outperforms. Now, one of the questions that was asked, or one of the observations that the patron made, which was a very astute observation, by the way, wanted me to discuss this, which was that look at what happened to silver and gold during the Depression. The ratio during the Depression. The ratio blew out high. I don't have the chart for it, but historically speaking, you can go find this chart. Remember that the Great Depression was a deflationary environment, right? It was a massively deflationary environment. Well, we've been in a deflationary environment since the bull market ended in gold in 2011. That's what this is saying. Because even though gold was mired in a bear market, silver was mired in a worse bear market. And the silver to gold ratio has been rising from 30 to nearly 100 in a deflationary environment where the central banks keep printing money to keep asset prices higher because asset prices want to deflate. QE is deflationary. It's a signal of deflationary pressures pushing central banks to create more money to keep asset prices from deflating. In an inflationary environment, you have the exact opposite. Then the central banks will be raising interest rates and trying to pull money off the table in order to try and arrest inflation. You'll get QT. Now, during the QT days, of 2015 through 2017, what happened? Or 2018, what happened? The silver to gold ratio the bull market was interrupted during the QT period in here. We got a new low, right? We got a peak, and then a collapse to a new low, then a reaction high, and then another new low before things began to change again. And then Donald Trump is elected, and everything changes, and everything about the Fed monetary policy begins to change. And again, we're in a very deflationary environment because the dollar's been rising, but gold has been rising as well off of this low. Remember, the 2016 low is the bottom of the gold bull market. All right, so we're going to see this ratio stay high during the first phase of the crisis because it'll still be a deflationary environment. While Europe is collapsing, gold will continue to outperform silver, at least maintain current historical outperformance. High silver to gold ratios between 70 and 90, which is historically very high. So even if the silver to gold ratio just stays flat for the next 2 years, it's still traditionally incredibly high. It's still 2 sigmas above the norm. once the inflationary part of the cycle occurs. And that will be after Europe collapses, after China goes through, a major contraction, after the dollar goes through its peak, and people have divested themselves of a lot of their dollar liabilities, and the dollar is going to get very weak. Capital is going to flow out of the United States. We're going to have an inflationary environment where all that money that's been hoarded overseas, all those dollars that were hoarded overseas, are going to start flooding back into the market. Dollars are going to collapse. And that's when silver is going, and commodities in general, are going to inflate. That's when you're going to get silver, gold, oil all moving higher. The dollar will move down. But in this deflationary environment, in the crescendo of this deflationary environment, you're going to see gold and the dollar moving higher. Hard assets, hard money. The U.S. dollar is considered hard money. Gold is considered hard money. Bitcoin is considered hard money. Okay? So nothing has really changed here from the last time I put up the Bitcoin chart, other than to show that, yes, we did get a very, very, very strong monthly close in January. As strong as it could have been. We could have broken the high. We could have closed above the high on this bar, but we didn't, within $50. That's pretty strong for Bitcoin. It's running into significant short-term resistance right here at this 9,500 level. If it breaks through this on a daily closing, then weekly closing basis, we're going to 10.5 or 11 or 12. And just watch these monthly highs on the Bitcoin chart. Remember, this is the BitcoinInvesting.com index. So this is an aggregate price of all of the exchanges. I'm not using Bitfinex or BitNex or any of those others. This is the Investing.com index. And for any cryptocurrency you see me do here, I'm using the Investing.com index for that currency, for that crypto. So we're going to talk about Dash in a second. Same thing. If I ever talk about Decred or BAT or Ethereum or whatever, and I owe somebody in a discussion about Ethereum as well, which I did not put into this. So we'll do Ethereum on Wednesday. That I'm always using the Investing.com aggregate index of the price for cryptocurrency because it just makes the most sense. Okay. So it strips out a lot of the noise, gets an average, and we go from there. So Bitcoin's in a very good posture here, but it needs to break through 9,500 in February. I don't think that's going to be much of a problem. We got 6-to-1 pot odds that we've already broken last month's high. We did it this morning. So that's what these, okay, so for the new people, these are what we call our volatility statistics and our predictive statistics. This comes directly out of just looking at open, high, low, and close, open, high, low, and close, no manipulation of the data whatsoever. This is just saying over the last in this case, Bitcoin, last 39 months, because that's all the data I've got, the average move difference between closing prices. So if we closed here and we close here, that difference is $950. If it's a down bar, it's the difference between this close and that close, $950. The range on a monthly basis is from the low to the high. That's $2,000. Just to give you an idea of what volatility is from month to month. I consider these kind of volatility statistics. Direct volatility. No secondary mathematical calculations, no differential equations, no bullshit. Pardon my French. Just directly looking at the data from a median perspective, and I use the median. I don't for my average. I don't use the numeric averages. These numbers are a look at are derived directly from asking, well, if we move up a little bit and like a minimum amount at all, right? What's the probability that will break the previous high? So from where we open, and for a new month, when or for a new bar, I just take the closing price from the month before, make that the opening price for the next bar until I get better data, and then use that to calculate how many times that gap, and say that gap in this case is like $200. So how many times, if Bitcoin moves up 50 cents or moves up $1, how many times out of the last X number of months has it moved up $200? Or in this case, $50. Well, 97.3% of the time. At the same time, if this is the open price and that's last month's low, what's the probability? How many times has it traversed this distance which in this case is over $2,000, 14% of the time. And we know that the average range on a monthly basis is $2,000, so it's not really untoward. Okay? I mean, these numbers here are really skewed by some of these massive bars, right? And as far as Bitcoin is concerned, this is a small data set. I would normally take 7 years worth of data, but I don't have 7 years worth of data. I mean, I do, but 7 years ago, Bitcoin was trading at $12, and that would really skew the data. So I've restricted this data set to since Bitcoin's been trading above $1,000, which goes back to early 2017. Okay. Normally, I would take 7 years of data for a monthly chart, and for weekly data, I take 254 weeks of data, which is 5 years, and aggregate 5 years worth of data and give you the average movements. Okay. So what this tells you is your pot odds for the month as to whether you're going to go higher, because once you break the previous high, that breaks resistance, near-term resistance, and says, okay, the supply of buyers is high enough this month to break through the peak of buying pressure here. And you now have the shorts on the run, and now you can, and more buyers have come into the market. It's psychologically important. It's technically important that if you break highs, you continue to break higher. And if you break lows, you continue to break lower, because these represent extremes in sentiment previously. It's important. Highs and lows are incredibly important. They're more important than opens and closes. Well, that's not true, but highs and lows are really important. Closes relative to previous highs and lows are what's really important. All right, so that's Bitcoin. Now let's talk about Dash. Now, I was asked directly why I like Dash. I like Dash for a number of reasons. I like Bitcoin because I think it's a great store of value. I'm not a Bitcoin maximalist. You guys know what that term is. Absolutely not a Bitcoin maximalist, but I do understand the argument. I just don't happen to agree with it. I think that Bitcoin is still alpha code that's gone viral, and it's always possible that Bitcoin may not continue to rule the world. And I think that even then, I think as a store of value, I think there's a possibility for a basket of currencies. And I actually would prefer to see a basket of currencies emerge as a kind of crypto store of value set, because competition is always good for the soul. So I distrust all single points of failure opportunities. I would prefer to see 5 coins really emerge with different governance models and different network security models to act as the crypto store basket, store value basket. I don't know that that's possible, but that's what I would prefer to see. Okay, Bitcoin maximalists would say not possible. Most of these people are not economists or monetary theorists. They're crypto guys. They're not economists. They're certainly not monetary. They're certainly not monetary theorists, and they're certainly not guys who've mucked around in real markets. Matter of fact, I know the person who coined the term Bitcoin maximalist. He's a very smart guy. He's a friend of my business partner, actually. A very good friend of my business partner now. He coined that term. I also know that he tends to put all of his money in the S&P index funds, because this whole crypto thing still isn't real to him. And this guy's made a lot of money in Bitcoin. So, give you an idea of what we're dealing with here. But why do I like Dash? I like Dash for a number of reasons. I don't consider Dash a store of value, though it has the potential for that. But Dash's gig is not that it's trying to be that. Dash is a payment currency. It's a payment coin. It's built from the ground up to be a unbelievably fast, high governance, high security model coin with low transaction fees and very quick settlement times. That makes it easy to use in a real world context. And it makes it a great currency. See, I almost think that the cryptocurrency is a bad term. It should be crypto money and cryptocurrencies. And then there's crypto tokens. It's like there's 3 different types of, or at least 3. There's really more than that. There's more like 6 or 7 different types of coins out there. And Dash for me is the best that I've seen as a that hits everything. It has good privacy, not the best privacy, good privacy of your transactions. So if you want to remain relatively anonymous, the government will have to, if they want to track you down, they'll be able to, but they will have to specifically target you, and the average not going to specifically target the average person buying a freaking coffee at Starbucks using Dash. Not that that's possible yet, but just go with me here. They're going to go after Pablo Escobar, who's trying to move, hundreds of millions of dollars of cocaine through the Dash network privately and anonymously. Dash's privacy is breakable if on a concerted effort basis. It's not as good as Zcash. That's fine. But Zcash isn't nearly as good a coin. Therefore, and it's terribly overvalued. Therefore, Dash, 1 second settlement times, 0.001 Dash as a network fee. It's insane. And the governance model has economic incentives built into it through the masternode network that is not just brute force hacking capability. It has a monetary component that in order to hack the network, I don't want to go into the specifics, but in order to hack the Dash network, you have to invest a certain amount of money in it, to control the masternodes, to be able to double spend on the network and crash the coin. Is that system as good as other ones that are on the market? It's a good question. I think there are better coins on the market for that, but I think I think Decred is one of them. I think that model is good enough to allow for there to be enough circulating supply for people to actually use Dash to tip each other and pay for things and to build a network of payment kiosks and places that'll take it, because it's frictionless in that respect. And there's enough supply that will allow that to happen, as opposed to something like Decred is really designed to be a store of value, because it pays such a high return to those who continue to invest in the evolution of the network, that there's almost none to be had. And so the price languishes because nobody has any to trade. That's okay. The network still continues to get valuable. And one day, Bitcoin goes to 20 grand, Decred will go to 100. Something like that. Will it ever reach numbers like 1,000 or 2,000 or 3,000? Probably not. It's also its stock to flow ratio is still low. So Dash has a lot of good things going for it. It has a lot of stock to flow, has a high stock to flow ratio. For those of you who know what that means, it's got good attributes as a currency, as a usable currency, as a use case currency. And it's well designed. And the team has a lot of money and makes more and more and more progress every day. I love the fact that they've now linked in with Uphold, which is the wallet back end for Brave. So as Brave takes market share in the browser space, and BAT becomes a good solid utility token for people to be able to break free of Google to support creators directly and frictionlessly, and to change the way internet advertising is done. Dash can be there to be the easy conversion layer to then use those use your earnings in the real world. It's not there yet. We're not anywhere close to the potential on this, but it's happening and it's coming. And over the last year, number of transactions in the Dash network have nearly doubled. That's all you need to know. Daily transaction volume is now 20,000 a day. I'll take it. When it's $50,000 a day, the coin will be at $500. That's simple. So, this month's bar, beautiful. Is there a huge supply of Dash? Not really, because the minute sentiment gets bullish, the thing goes ballistic. Resistance is really, for all intents and purposes, right here at 112. It closed at 116 this month. So even after this enormous bar and this anomalous period here, most of the trading last month was done below $130, $140. 99% of it was done down here. And closing down here, closing above a 112 means that 160 is in the offing, and then 188. And once it closes on a monthly basis above last year's high, it's going to go back to $250 or $300. But at that point, it'll also be doing so in sympathy with Bitcoin moving to 12 grand. That's what you're looking at. Okay. So this is why I like Dash. Oil. I've talked about it a lot. I want to take the victory lap. I'm sorry, but my call on oil was back here. I was calling that that oil couldn't sustain these prices 6 months ago, and I was right about it then, even while watching this play out. This month's close in oil is catastrophic. I mean, it's catastrophically bad. This is a bearish engulfing bar where you broke the previous high by a lot and the previous low by a lot, and you closed at the bottom for the month, and you closed well below the last 2 monthly closes and within spitting distance of the most recent low. 56, 55, or 65, we closed here with 75 cents of, this is January, December, November, October, September, right? January, December, November, October, September, August. The August low of 55.88. And then there's the 2018 low at $50. And I honestly believe we're going to there before the end of the quarter. And this has huge implications for huge implications going forward. I think we're going to see a panic down to about $50 before we get a stabilization in the price of oil. And the dollar will continue to push higher. Friday's action in the markets was off the charts weird. The massive rally on the monthly close on the euro is not sustainable. But at the same time, markets got really weird when the Dow started selling off by 600 points. Speaking of which, 2 months ago we had a breakout of this cluster of resistance, slowly rising cluster of resistance here in the Dow. We got a breakout. We got follow through. And then we got this hammer down bar here. This is a terrible close to the end of January. This is the December low at 27,325. This is the weekly chart. You can see what I'm talking about. As of Wednesday's market report, the Dow was trading up here within the bottom of this bar, telling us that we were trying to avoid any kind of reversal signal. Oops. And there's your 27,325, which is the December low. This is a very significant breakdown on the weekly chart. We've got 8-to-1 pot odds. We're going lower this week. I think we're going to probably get some climax selling in here this week, and then we'll probably stabilize in the 26s. But the big question is, do you stabilize at above this 27,325? Because you've already broken these lows here. You did all that in 1 week. So this is a very ugly reversal here. And we should watch it very carefully. I don't think, however, it's sustainable because of what's happening around the world. I think a lot of the this fear over the coronavirus and whatnot, I think is way overblown. If I'm wrong, I'm wrong. But I'm still of the opinion that the fundamentals for Europe are far worse than ours. And with Donald Trump clearing the impeachment thing by Wednesday, I think we're going to see a reversal here. All right. That's what I've got for this week. This is probably a long one again. But again, this one was necessary to do a bunch of things and clean up a bunch of outstanding requests from patrons. Y'all are fantastic, as always. I can't say enough about what you do. Your patronage allows me to remain fiercely independent and laugh in the face of the establishment and to continue to be as brave as I possibly can. Okay? It allows me to stay brave even while working for effectively a corporate entity like Newsmax. Okay? Though they encourage me to be as bad as I can be up to a point. I will make that abundantly clear. So I have no issues at all with that. But it's always, doesn't matter. It's like Bitcoin. Bitcoin is like the Bitcoin maximalist argument, right? It's not a problem that Bitcoin serves that role and does it well. But isn't it better to have a little bit of competition for that, in order to keep everybody honest? I think it always is. So, this Patreon project that we've got going here. And I was speaking with my partner the other day. This is the last thing before I leave. And we've got some things in he's had a really rough 12 to 15 months. I mean, really rough. And hopefully we're on the other side of that. Again, I keep saying this, but I'm really hoping that we were having a strategy discussion the other day. We really do want to get to kicking this thing up to a different level. And there will be some changes coming in the future, and I will seek your input on some of that stuff. But understand that all we'll do is add value to whatever it is that we're currently doing. I won't take anything away, certainly, because that would be insane. So we're only looking at trying to do more than we're currently doing. All right. So it may change. We may get some format changes. We're in the process of discussing what's the best way of going about that going forward. But just so you know, prepping the narrative now, not making any promises or any predictions, just saying that these things are happening and you should know about them. Okay. All right. So you guys have a great Sunday afternoon. My wife and daughter are over at the Medieval Fair. I'm not going. I've been there a billion times and I'm not really interested. And you guys be well. For those of you who asked about my goats, Grace is doing great. The babies are doing fantastic. As a matter of fact, I think I'm going to go outside and spend 5 minutes watching baby goats frolic. You guys have a tremendous afternoon. We'll talk Wednesday. Keep your stick on the ice.